Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today I want to discuss GE. Y'all had questions about GE. We talked about GE yesterday, and I think it was number 3 on the most popular list for millennial and Gen Z investors. And one of the questions was, why? Why is GE on this list? Why are people buying into it, and what's going on there? So I want to discuss that and also discuss there's a feature, if you will, or something that's going to happen with GE's stock on August 2nd, and that's a reverse stock split. So let's talk about GE first, then I'll tell you about what a reverse stock split is, why it matters, what it does, and then whether or not we should consider investing, and if so, when. All right, so let's go into it. So GE is expected to rise. I think it was Goldman Sachs. Let me double check that. Goldman Sachs thinks, yes, Goldman Sachs thinks that their price could jump 24%. And this was on June 29th of 2021. Now, I'm looking at GE. I'm doing a lot of research on GE. I've got 8, 9, almost 10 tabs open trying to figure out why people are jumping into GE and why people feel so strongly to make it the number 3 most popular stock. And to be honest with you, I can't find a good reason. Now, if you are a technical investor, which means you're looking at charts, the chart says, yes, you should buy GE. The chart says that. I'll give you that. We have what are called momentum indicators that say once pretty much they chart these lines and they say once it moves past this threshold, it's a buy. And that is true. So that happened just a few weeks ago. If you are a technical analyst, technical investor, you can look at the chart. People have their own charts and how they look at those, but the chart does say, yeah, you should probably get into it, and maybe it could take off and have a pretty significant run. I will say also that compared to some of the other stocks, I'm not overly impressed, but also I need more than a chart. I'm not saying that investing based on a chart is good or bad, but I need more than that. I need a little bit more logic. I have not found a good enough article, and maybe it's just I didn't have enough time to find it or look in the wrong places. But I have not found anything that says like GE, the business, is poised to do X, Y, and Z. Yes, they've gotten leaner. They've sold off some things. Okay, but give me something. Y'all creating a new product? Is there something changing in the economy that makes GE more attractive, or is it just popular? So it's hard for me to invest in the company for me right now at this point. I might do a call option on it. I think that might make some sense for me because I don't have to own the stock. I don't have to worry about it. But we'll see. So that's just my quick look at GE. But I will also give you what a stock split is. So a stock split is essentially, think of it like making change for $1. So you have your forward stock split, which is essentially taking a $10 bill and giving you 10 ones or 2 fives. That is a forward stock split. It makes the company cheaper. The share price is cheaper. It does not change the value of the company. Again, it does not change the value of the company because 10 ones is the same thing as a $10 bill. Really doesn't make that much of a difference. However, it is more attractive to certain populations. So let's take Apple. I think Apple last year was like 300 and something odd dollars a share. They did a stock split. It was less expensive, and people feel like, oh, I can afford this now. Let me go ahead and invest in it. When in reality, when you're on public and a lot of these other investing apps, it really doesn't matter what price the company is because I can get it for $5 or $10 or whatever price I feel like paying for it. So it really doesn't matter anymore. But it's a perception type of thing. We saw this also with Tesla. Tesla did a stock split, made it less expensive, and then people, the logic is people will tend to buy it. So what GE is doing is called a reverse stock split, where you're taking those 10 ones and you're putting it into a $10 bill, which in the eyes of some can be more attractive. If you ask me, what am I going to grab first, a $10 bill or some crumpled up ones, I'm going to grab a $10 bill. I just am, right? The reason why, though, is because when your stock is cheaper and it becomes more expensive, it may make me want to jump into it a bit more. It makes me feel a little bit more safer to a degree. For example, I have a rule. It's not for everybody, but my rule is if it's $5 or less, I ain't touching it. It's a trash company. That's just, it's close to penny stock area. If it's $5, it ain't great. Now GE is at $13, right around $13, which ain't that far off. Okay, so for me, I probably wouldn't really look into it as much, but I'm not going to solely judge on the stock price as something that's 10, 13, 14, $15. I'm not going to be so harsh on it. But if it was $5 like 2 weeks ago, then I'm going to be a little bit more concerned, right? So they're doing a reverse stock split, which is going to make their stock a lot more expensive. And in fact, 8 times expensive. 13 times 8, you do the math, that's going to be the approximate share value, except that, it depends on what the share price is on August, 1st or whenever. So I'll let them handle what the price is going to be, but you will see that, and that they think could help people say, look, GE is a more legitimate company. They're not struggling as much. I'm going to go ahead and buy them. Now, it does not make that true. Okay, that does not make it true. Just because you change your 10 ones to $10 bill, don't mean I ain't broke, right? If that's the only $10 I got, I'm still broke. I might look a little better. It might be a real crisp $10 bill, but that didn't change anything. So that's the other thing with G, and that's a concern for some analysts and some writers in the investing community. Is like, well, yeah, you can do that. It might attract some investors. But if you still have some internal issues, if you still haven't solved some of the problems that you've experienced back since the Great Recession, that's not really going to help you. So we'll see. The chart says by GE. I'm not entirely confident on it just yet. But to drive this point home, I also wanted to illustrate that with what's going on performance-wise. And just, I'm just like, eh. So last 6 months, I'm comparing this to some of the companies we had talked about yesterday. So last 6 months, GE is up 14%. The overall stock market, the S&P 500 is up 12, or around 12, 12.23 if you want to be exact. GE is at 14.84 according to Yahoo Finance. That's not exciting to me. Like a 2% premium, right? You made 2% more than the overall stock market. Okay, I'm not impressed. Comparatively, you got Ford, which is up 28%. And I say Ford because Ford was number 4 on the list, and the American Airlines, which was on that list as well, I think they were 6 if I remember correctly, they're up right around that 20% mark as well. So again, that's one of these things isn't really necessarily like the other. So again, it just really stands out to me. I don't know why. However, it does look better if I go back an entire year. So if I go back and say 1 year ago, how well did it do? I've got GE at 90% gain, which is impressive. 90% in a year is good. Compare that to Ford at 108%. Ford still comes out the winner here, but then American Airlines is at 79%. Okay, so that makes me feel a little bit better if I'm looking at an entire year. The overall stock market is up 32.94%. All are very good. Okay, the average is 7. So all of these are very, very clear winners. There are no real losers here. But when I look at a year, if I'm taking a more long-term approach and say, I'm going to buy a GE now, and I'm looking a year from now, 2 years from now, a year and a half from now, then maybe, assuming that the chart is right. Personally, I just need a little bit more logic behind this. So I understand why somebody would buy American, because you feel that travel is going to pick up. When we had the Delta variant warning, right, and people were scared not too long ago, and everything sank, that makes sense to me, right? I can't have that same logic with GE. That it didn't make sense to me why GE fell 4% because of the Delta variant stuff. That those two things don't mix for me. I understand that Ford and Tesla and these other companies could rise, even NIO. I got the logic for NIO in that we might be going towards green vehicles. We know that we want to do infrastructure stuff. We know we want to build more electric stations. All that kind of stuff makes sense. So I can get behind that. I can do my research and say, okay, this is why. Same thing with Capital One. Same thing with Target. Same thing with any of the companies that I currently invest in. I personally have not found one for GE that says that GE is going up because of this, like this economic thing. So again, I'm just telling you what I'm looking at, just telling you my opinion on it. That don't make it a bad investment. You can make money on a lot of stuff that don't make sense. Yeah, ask Dogecoin, right? Ask, all of these other meme stocks. And I don't think that GE is a meme stock. They're a more legitimate company. I do think that it will continue to rise. I've got evidence based on a chart, however much value you want to have in that it will probably rise in the short term. I think it's an okay investment. I just personally prefer a little bit more hard evidence as to why, and has some logic to kind of cling to. So that's my take on it. Now you know what a reverse stock split is, why companies do it, as well as how the company has performed in recent years. The other thing that I was made aware of via it was Wall Street Journal, that if you check like the 5-year chart, it's still not all that great. They got quite a ways to go to get back to what they're used to being years and years ago. So there's that, but I don't know if I would stick around for that long. It's just something that I would stick in for the short term. If I were to invest in it as an investor, if I were going to buy the stock, I would probably sit on it for an entire year. It's not something that I personally would say 6 months from now I'm going to come back and reevaluate. I would probably reevaluate this one within a year. So those are my takes. Let me know what you think in the comments. Why do you think G is up? Do you like it? Do you own it? I kind of want to understand like why people are buying into G, because I don't know. I would like to learn. Y'all teach me this time. All right, that's it for me. Make sure you hit the like and subscribe button. Make sure you hit the link in the description below. I don't know what I'm going to put there. It could be the email list. It could be a class. I don't know, but y'all click it. All right? I'll talk to you guys later. Bye.